Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics and/or financial topics. So dive in, let's take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, that's where I dive deeper into all of these topics and subjects, looking for potential investment opportunities. And that's where I share all those opportunities with everyone in the community. And I also go over training sessions on portfolio allocation and other things that people are interested in for those question and answer sessions. So Eric Nuttall says 2024 has been the year of false narratives, in his opinion, requiring constant debunking, yet whose cumulative impact on sentiment has been devastating. Surging U.S. shale production is the lowest rate of growth since its inception, ex-COVID 2015 Saudi spanking. Faltering OPEC plus cohesion. UAE makes key concession. We've got meaningful non-OPEC growth. Brazil disappoints by 350,000 barrels a day and total non-OPEC by 0.5 million barrels a day. Exxon and others are losing discipline. Conventional spending flat 25-24 and through 2030. And 2025 guide misses consensus by 100,000 barrels a day. Oversupplied market. Global oil inventories are down 102 million barrels year to date. Saudi is worried about losing market share. The cut is extended by 3 months and over 18 versus 12 months is what they've done. And to be determined in 2025, drill baby drill, 3 million barrels a day of growth versus twilight of shale. Twilight means that you're basically done. China peak demand due to EV penetration is what a lot of people are saying. And then Trump tariff impact on global economy, oil demand. No wonder energy investors are exhausted. That's what people have been saying, and none of it really materialized in the way that they said it was going to materialize. Steve Burns. So billionaire market wizard Paul Tudor Jones teaches Trading 101. He says, I see the younger generation hampered need to understand and rationalize why something should go up or down. Usually by the time that becomes self-evident, the move is already over. I have a lot of people that ask that question. They ask me, well, why is it going up? Why did it sell off so much? I'm going to tell you this, guys. Here's a secret. No one knows. There could be some events that are blatantly obvious, like where everything sells off. Okay, we know what that is. But if it's not blatantly obvious, if it's just a one-day move where a stock goes down 5 or 6%, and let's say the whole sector's down, we don't know the exact reasoning. And in the news, they make up stuff like, oh, it's due to XYZ. They don't know, they just make it up. So you have to get very, I'll say, comfortable by not knowing the reason why. It doesn't even matter the absolute reason. I think the better question is, or you should ask yourself, if something goes down, is the long term still intact? And most of the time, the answer is yes. He says, when I got into the business, there was so little information on fundamentals. And what little information one could get was largely imperfect. We learned just to go with the chart. Why work when Mr. Market can do it for you? These days, there are many, many more deep intellectuals in the business, and that, coupled with the explosion of information on the internet, creates the illusion that there's an explanation for everything, and that the primary task is simply to find that explanation. As a result, technical analysis is at the bottom of the study list for many of the younger generation, particularly since the skill often requires them to close their eyes and trust the price action. The pain of gain is just too overwhelming for all of us to bear. And there's some truth there. What I like to do is I like to use technical analysis as a validation of a bigger move. And then you can find entry points based off of what the herd is doing and money flows changing. So if it's changing from a downtrend to a bottom to an uptrend, you can see that in the charts. And that is validating any fundamental reason why you're buying it. It could also be a validation of cycles turning. And I don't know how else to do that without doing technical analysis. I don't think you can do it and be unbiased. You can't read articles. You can't have someone tell you the why. You have to figure out and synthesize maybe why something's occurring. And then you got to connect the dots. If these guys are that smart, you got to connect the dots yourself. You can't ask, well, why did this go down? Why did this go up? How come every day it goes up? That's not the right question to be asking. You're just gonna, because you don't know the exact reasons. Maybe a firm blows up one liquidate a certain stock, and that stock is not super liquid. Usually at bottoms of markets, stocks are not very liquid. So you can get very big moves over short periods of time, but we don't know the reason, the exact reason behind the why. And even if you knew the why, it doesn't matter because it already occurred. What you need to figure out is what is causing money flows to go in or out of assets before the money goes in or out of the asset. That's what you want to find out. And you may or may not ever find that out. You might find out, well, money flows into this asset during these big, long periods of time, but you can't break it down into weeks or months or an exact, precise location for an entry point. It's always going to be, in this general ballpark, this general area, this area where we break a downtrend and start to move higher. Nothing is pinpoint, sniper accurate. And a lot of the technicals, if you don't pair them with fundamentals, then they're not as accurate. So you're going to get a lot more false positives or false negatives, however you want to call it. So I think it's important to tie everything together. QE Infinity says PPI monthly in 2024. It's clear inflation is reaccelerating now. Why does the Fed want to throw gasoline on this fire and cut rates? It makes zero sense. And this is the producer price index ripping higher here. That'd be an interesting one to check, the producer price index. Actually, let's do that right now. So we're going to do producer price index divided by the consumer price index. That's kind of what I want to check here real quick. Because if the producer price index is going up, here we go. So here we are. We've been tracking sideways. This goes Monday, October of 24. And what we've got is a big double bottom here. We've got a big downtrend here for the producer price index divided by CPI. The 1970s big inflationary move was this year. So what happens is producer price index it goes up faster than consumer price. And then the consumer price was catching up during this period here. And they were basically moving in lockstep. When the inflation is done, it rolls on over. But what we see here is a double bottom. You want to draw this line across here. We've got this big double bottom. We come up, hit our head on resistance. We've come on back. And this is where things will get interesting because if this breaks higher, I kind of view this as like a falling wedge, like that, to some degree there. And we got this falling wedge going down. And if we break, I think we break on up there where that arrow is and break out of all of this big downtrend. The big downtrend, it started in 1951 and it bottomed in the year 2002, the year 2020, And then I think we're going to get a big move the upside here. And that's an inflationary period. And inflation is just starting to reaccelerate again. A billionaire market wizard, Paul Tudor Jones, he says, all roads lead to inflation. I'm long gold, I'm long Bitcoin, I'm long commodities, in his opinion. And commodities are an incredible area to be looking because they're so cheap in relationship to financial assets. I think gold is too. Henrik Zaberg, he says, the only reason analysts, etc., talk about the threat of inflation at this point is because they don't understand that the economy is heading into a recession. The confusion and lack of business cycle understanding is truly remarkable. Inflation is a lagging indicator on the economy. That inflation is as low as it is now before entering recession is a major warning sign of deflation coming, is in his opinion. What I would say is he's looking at this from previous business cycles and applying the previous business cycle thought and logic to it. When we would have slowdowns and recessions, they were deflationary or disinflationary in previous business cycle recessions. I'm not sure that he's got this right here. I think that we could have inflation and a slowdown simultaneously. That is very possible. That's known as stagflation. Now, is that going to be the case? I don't know. But I can tell you we've broken out from the bottom of interest rates. Interest rates bottomed in 2021. We've broken to the upside, and inflation could be with us for a long time. And that could deal with the situation that we're in fiscally. Look different than what they did the past 40 years. And what he's doing is he's looking at the past 40-year time frame shifted here on this big move up. And what Powell said, this is coming from Powell's mouth. He said, well, what happens if inflation swings back below zero? He's like, whoa, time out. We don't want that. We do not want that. We want inflation at 2% or above. So what we're at is 2% or above here. We're at like 3 or 4 right now. And he doesn't want it to dip much below 2%. If we dip, he doesn't want it to go negative, which is very rare. We did it in 08 and 09. But in order to get deflation, you have to destroy credit. It's a deleveraging event. And we don't have that deleveraging event outcome, I think. It's not present in the market, at least not in this time. Coming back. Not that. All right, so we went through there. Gary said, gold is in the advancing phase of a new 8-year cycle. It has completed a breakout from a 13-year cup and handle base. That means we want to play the rally out of every intermediate cycle low with some leverage. It's not going to be easy, though, as we have and are seeing the banking cartels on life support, but they aren't completely dead, and they will produce enough volatility to make it insanely hard to hold leverage long positions. That's why one has to have the correct strategy to use leverage in this market, according to him. I don't use any leverage. I just get long in the metal, sit in them, and let the inflation, ride the inflation boat higher. This inflation is going to when it comes into the market. So that's how I view it. That's what I think is going on. It's just inflation. They're trying to inflate their way out of how much debt they have. And again, like Paul Tudor Jones said, all roads lead to inflation. That's true. In the situation that we're in, all roads lead to inflation. Here's Jordan Baker. I thought this was really interesting here. So I'm going to read this one, and then we're going to come back to that one. So High Heat says, he just read research piece out of Spain where they believe Ghawar, which is the largest oil field in Saudi Arabia, that oil production may have dropped to 3 million barrels per day. The title of this piece is "The Collapse of Oil Production is at the Door." Guys, this is crazy if this occurs. So Ghawar is the largest oil field. It's one of the most well-known oil fields. I think it produces a little over 4 million barrels, 5 million barrels at its peak, somewhere in that range. And if it's dropped to 3 million barrels a day, we're in trouble. As a world oil production, we are in massive trouble. So just to let you guys know, this was also posted with that post. So it says global oil and natural gas supplies virtually disappear without continued investment. And this is ExxonMobil. And it says, as the world's demand for oil and natural gas remains strong, sustaining investment is more important than ever. Our outlook reflects oil production naturally declining at a rate of about 15% per year. That's nearly double the EIA's prior estimates of about 8%. So I just want to make this clear to everyone. We are at 104 million barrels per day production, 103, 104. Let's round it to 100 million. 100 million barrels at a 15% per year decline is declining 15 million barrels per year. 15 million barrels per day decline that we have to find. 15 million barrels per day is larger than the entire production of America, who is the largest producer of the world. If we are losing Ghawar, and if we're losing shale, this is not going to look pretty. I mean, this will be the best investment of anything, of anyone's life, of any period of time, because all of the world is reliant on oil. And the price at where we are today is ridiculous for what the situation could be coming up over the next few years. It says this increase is the result of the world's shifting energy mix towards unconventional sources of oil and natural gas. These are mostly shale and dense rock formations where oil and gas production typically decline faster. To put it in concrete terms, with no new investment, global oil supplies would fall by more than 15 million barrels per day in the first year alone. At that rate, by 2030, oil supplies would fall from 100 million barrels per day to less than 30 million barrels per day. That's a 70 million barrel short of what's needed to meet demand every day. But obviously we're not going to put no money reinvestments into it. We're obviously going to invest. But this is investments into existing fields. The light blue here that we've got, that's the big gap that's forming. This gap is more important than anything that you have looked at in the entire world. Because this here can put countries and people into poverty if this gap exists. Now, obviously the gap will never exist. The price will go up to balance the market. And a higher price may or may not bring on more barrels of oil. It may slow the decline. It may not stop and reverse the decline. And that's what's so dangerous about this. Our world is built around oil, and if we do peak in some of these big fields, I'm not sure that we're going to get that production back to the level that we're at today. Here is Occidental CEO sees oil supply crunch from 2025. It says the ratio of discovered resources versus demand has dropped in recent decades and is now at around 25%. Oxy CEO Holub, 2025 and beyond is when the world is going to be short of oil. Oil industry executives have been warning that new resources, new investments, and new supply will be needed to maintain the current supply levels as older fields mature. That's your decline rates. There's a really good article written by Goring and Rosenzweig talking about oil depletion. And it seems like a lot of people have a point coming up here where 2025 is the point that we are going to experience declines potentially in oil that overcome our additions. We're right at the tipping point here. And then we've got total world liquids production expected to peak around 2027, but crude and condensate are unlikely to recover to 2018 level. So 2018 is here. This is where Simon Michaud and some of these other guys claim that peak oil occurred was 2018, but we've had this kind of trough going on. We've also had an increase in natural gas liquids that's been pretty robust. It's been hiding things. But as we roll over 2025, 2026, and onward, and if we see this decline on the right-hand side here in the 2030s, that's not going to be pretty. And the scary part is everything that we do on this earth that is, I guess, the energy that is supplied transportation and for a lot of the things that we do in our advanced societies is dependent on oil. I don't know if we can change that. So we're gonna get into a really interesting time from 2025, which is right around the corner onward. So Richard Meyer says the reason U.S. natural gas will power the data center and manufacturing boom, in addition to its availability, cost, and reliability, is that it's already the fastest growing energy source globally for 2 decades. It's poised to scale rapidly to meet diverse energy needs. So US shale gas moving on up. But what did we just read about? That US shale gas could roll over at any second here. That's also in the Goring and Rosenzweig. So if this rolls over, guys, I mean, this is going to get real interesting. Is what I'm going to say. It's going to get real interesting. Christine says, this is ExxonMobil. There's a thirst for liquefied natural gas in this world and no shortage of customers wanting to sign long-term contracts. Everybody want to be signing these long-term contracts. And guess where it's going to come from? Natural gas. Now, I know we've got a lot of uranium guys, a lot of nuclear bulls. Nuclear will come on and we'll have to do nuclear, period. In the short term, though, coal and natural gas, we're going to have to hit it up hard. We're going to have to hit it up hard. We're going to have to hit up everything hard. So here's Eric Nuttall, another one. We believe the next Trump presidency will bear witness to the peaking of U.S. shale production and that its twilight will have profound implications for the oil market going forward. Yeah, we're going to increase 3 million barrels, 333. Good luck. Good luck. It's coming. He's saying it's going to peak. A lot of these experts who are looking at the data saying, nope, we've already peaked 2023 potentially. We've got other people saying that there's going to be a shortage in 2025 that are industry insiders, CEOs of companies that obviously have advanced models looking at this, and they're also the largest producers, and they are feeling it in their production. Of course they're going to know or have a good idea of when this is going to bear out. I think we're right on top of it. Josh Young says, oil prices are down today, possibly on this news. Trump has very little direct control over oil drilling activity. Beyond facilitating pipeline and export permits and cutting regulations, and perhaps increasing drilling tax incentives like those for alternatives in the IRA. So says, I'll be looking at oil prices bringing down, coming down very substantially, meaning energy costs coming down. And with energy comes everything else, says Donald Trump. But he has no direct control over it. Rock bottom entries. Let's see what he's got to say about it. Gold is just 4% off its highs, but sentiment would make you think otherwise. This is the most hated and disbelieved precious metals rally in history. The next leg higher in miners will be explosive, fueled by pure FOMO. Well, that's his opinion there. Egon von Greyers, let's see what he has to say about all this. Total global gold reserves allegedly held by central banks are valued at 3.1 trillion at the current market price. That value is absurd when one US company, Microsoft, has the same valuation. Just think about it. Microsoft is as big as the gold backing of the global financial system. That is pretty jacked, isn't it? If you think about it. Charlie Munger says extreme patience combined with extreme decisiveness. You may call that our investment process. Yes, it's that simple. Coming down, we've got Tavi. If we are at the start of another secular bull market in gold, which I believe to be the case, then I see emerging markets on the brink of a major catch-up move. So here's emerging markets. You can see gold moving and emerging markets moving together. And he thinks that we could see a big move, a catch-up move in emerging markets versus gold that's already been running higher. Very well could be the case, and I would agree with him. Here's natural gas resolving a textbook reversal pattern relative to crude oil. We're getting a breakout of natural gas versus crude oil here very recently, and we've broken through this double bottom, and we are working our way on higher for natural gas outperforming crude oil. The out-of-touch oil market will meet reality soon. So persistent bearishness in the oil market as it pertains to the surplus expected in 2025 will meet reality soon. With U.S. oil production disappointing to the downside, oil market balances will be closer to neutral for Q1 2025 versus the plus 1.4 million barrels per day expected by the market. I think the number one thing to look at going forward is the oil market. I want to see what this looks like in 2025. We could be super tight. And if it is tight and oil prices start to go up, we want to see if there's any supply response with that price move. That's what we want to see next. And then many are now waking up to the fact that 2025 will be the year of silver. This chart I've been posting for a year has been saying that a lot. And at the service, we bought at the very lowest for the big silver miners back then, give proper guidance. And this is a big breakout. 14-year rounded bottom and potential entry point that he's got here. And then the move higher, the breakout. And we're in that move for silver. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Discount coupon code is what we've got active. And that's all I've got for today. So we'll catch you next time. This is Finding Value.